Good evening, YouTube investors. This is Steve from the Stock Market Shark YouTube channel. Guys, today Palantir is going to be in our focus. And I'm going to be completely honest with you guys. If I only had one single wish today, that would have been the following. Palantir, please don't make me cry. And probably many of you might have repeated this sentence all over and over again in today's painful trading session. This was really painful, all over drama for Palantir. Just look at the performance of the stock today. The stock has closed in almost minus 16% today from its historical lows, because the stock has been moving at its historical lows recently, and it performed a major drop following the Q4 earnings numbers. So guys, today I'm coming with my analysis and my research on the Q4 earnings numbers. I'm trying to help you put everything in the context. I'm trying to help you interpret these numbers and figure out what's going on with the stock and what's coming next. And at the end of the video, I'm going to formulate my price prediction based on real research and real valuation models to tell you guys what you should pay for the Palantir stock today. What's the fair intrinsic value for the stock? So please bear with me. But before we start, please take this moment and hit the subscribe button, smash the notification bell, and hit the like button as well. Share your comments below if you would like to be part of this community. If you don't want to miss any of my future updates and essential analysis on the stock market. I'm coming with daily interesting, entertaining, and research-based videos. So please don't forget to subscribe. But now I don't want to waste any of your time. Let's look into the numbers and let's try to figure out if Palantir's generated a real shock to the market. This is basically reasonable, or this is part of the negative macroeconomic context that is basically driving the markets overall in the recent trading. So let's look at the highlights first, guys. We are usually looking at two metrics, the top line, which is the revenue, and the earnings per share. The report has been mixed, basically. In terms of the revenue, the company generated an upbeat. So the revenue came in at 433 million US dollars versus the expectations of 480 million. So there was a quite considerable upbeat in terms of the revenue, but in terms of the EPS, it was a shame. Palantir was not outperforming the expectations. So the EPS came in at 2 cents versus the 4 cents estimated by the analysts. And this is basically, guys, what we are waiting for in terms of Palantir, that the company is able to generate an earnings that is basically above our expectations. Basically, it's producing a breakthrough, and this has not happened this time either. But that's not a problem, because this is teaching us one thing, that we have to be patient. The stock market in general, and also Palantir as an investment, is a long-term play. So for those of you guys, and this has been reiterated many times by Peter Thiel and Alex Karp as well, for those of you who want to get rich quickly and easily, probably Palantir is not basically the most suitable stock. At the moment, Palantir is not the next Tesla. It can be, but currently it's not. And Palantir at $200 US at the current stages, that's only a dream. So Palantir is more realistic between $10 and $20, but we are going to look into the fair valuation pretty soon. I'm going to share with you the numbers, but just don't dream about Palantir at 200, I think. And this idea is supported by the numbers as well. So now we are ready to look at the highlights of the report. Everything is on the screen, so you just have to follow me and pay close attention. Total revenue growth in the latest quarter, 34%. This is slightly below the latest quarter's result. It was 36 or 37%, so 2 percentage points below that. The government revenue is slightly slowing down, so it's 26%. And luckily, the commercial revenue came in massively above the last quarter's result. So it came in at 47%, and last quarter's result was 37%. And within the commercial revenue, what's more impressive is that the US commercial revenue grew by 132%. That's huge. So that basically indicates that in the United States, Palantir, in terms of the commercial revenue, is really on the doorway of a breakthrough. So that's what we are waiting for. So something has started there. So there's a momentum accumulating in terms of the commercial revenue, but more on that a little bit later on. And we can also see the adjusted free cash flow that came in at 104 million. Also not bad at all, and this would be used in our valuation model. The gross margin is 80%, very impressive, and the adjusted operating income 124 million. So these are the highlights, guys. And now let's take a closer look at what's going on in more details. So this is very nice. This is a very nice presentation. Palantir at the beginning is just showing you guys that glittery, fancy PDF that basically this slide is just showing the use cases that Palantir's platforms are used for, and I think it's really convincing. So there's evidence of the various use cases that Palantir softwares are used for. Just to give you a few examples, powering the US vaccines program from clinical trials to jabs in arms, for instance. Or it also supported risk management of multi-trillion-dollar mortgage portfolios through the global financial crisis, or powering public safety power shut-off program to mitigate wildfire risks. So there are numerous cases, and this is just an evidence that Palantir's platforms can be so widely used in so many industries and for so many use cases that is almost unimaginable. But this is just the marketing part. And then let's dive a little bit deeper into the numbers. I think this is a very interesting slide, by the way, because this is basically showing how the Gotham and Foundry total addressable market is expanding, is developing. And what I'm more interested in is the Foundry part, is the commercial part, because that is where we are waiting for the breakthrough. So that is where basically Palantir can hit really big if the execution is properly done. And as you can see, in 2017, Palantir was only offering a data platform, and in 2018, above that there was built an analytics platform as well. 2019, the platform has also integrated some machine learning and modeling capabilities. And 2020, this is the year when the no-code simulation and low-code aspects of the platform appeared. And 2021, the Ops BI. So this is where we are at the moment. And 2021, in terms of the Gotham platform, was the year of the Edge AI, the Meta Constellation, and Titan. So for those of you guys who are not familiar with Edge AI or the Meta Constellation part, so Palantir's Edge AI is an orchestration and sensor fusion engine that runs on disconnected and remote endpoints. It enables autonomous decision-making on hardware models consuming real-time sensor, radio, acoustic, georegistration, and time series data. So this is basically what Palantir's Edge AI is doing. It integrates and it orchestrates multiple endpoints of sensors, basically, and builds upon them AI capabilities. And the Meta Constellation is something very similar. So Meta Constellation, it integrates numerous satellite endpoints and basically builds up a decision-making model on these endpoints. So it has decision-making based on the data provided by these endpoints. So this is pretty much the innovation that was basically brought by the Gotham platform in 2021. And what I would like to dissect a little bit in more details is the commercial revenue, because the most critical piece is there. So the largest hopes related to Palantir, largest breakthroughs that we are waiting for can happen in the commercial segment. So we want to get evidence that there's some momentum building up there. So let's see if this is the case. So as you can see, we've seen a quite impressive growth in the commercial customer count. So on a year-to-year basis, overall, so including the US and other regions as well, there was a growth of 200% from 2020 to 2021. In terms of the revenue, we can see also an increasing momentum. So you can see the growth rates here. So from the first quarter of 2021, where we've seen a growth rate of 19% in commercial revenue, we reached almost 50% commercial revenue growth. So there is an accumulating momentum there. There's an accumulating dynamic, and that's pretty promising. So that's evidence that the company might be at the breakthrough at the doorways of a breakthrough in the commercial segment. And let's dive a little bit deeper and let's examine the US numbers, because the US numbers are even more impressive. So in terms of the customer count, the US shows a growth of 371% on a year-to-year basis. And the momentum is even accumulating faster than globally. So from 72% in the first quarter of 2021, we increased to 132% in the fourth quarter of 2021. So almost doubled the momentum, and this is really important. And I would like to close this presentation, this review, with a quote from the customers that is included in the earnings presentation as well, just to basically grab the essence of what Palantir might be for today's developers, and basically just to highlight the potential in the company. So the customers quoting, I'm just quoting right now, the customers said, Foundry is to app developers this decade what Amazon Web Services was to them last decade. So basically they compare the significance of Foundry to Amazon Web Services, and this is, I think this is a huge basically remark from the side of the customers. So this is pretty much the report in brief, and I would like to put the numbers in context and to summarize what the report was about and how it should be interpreted. And as the final step, just take a quick look at the valuation of Palantir. So I would like to put the latest revenue growth number in the context that compare it to the historical values. So worrisome data is that Palantir's growth momentum is slightly slowing down compared to the historical values. So as you can see, the latest number, the latest revenue growth is 34%, and we've seen numbers above 41 for full year 2021, and 47 for full year 2020. So Palantir's momentum, Palantir's growth rate is slightly slowing down, but we are still above the management's projections of 30%. So the company's management is projecting 30% growth till 2025, and we are above that value. We can see some indication of slowdown, but I think that it's still in line with what we expect on the long term. So no deviation from there. And also promising sign is that in terms of the cash flows, basically the company is catching up. So we've seen 700-fold increase in terms of the free cash flow. Let's see if the company can keep this momentum up, but that's a very promising sign to see such a dynamic free cash flow growth rate. So guys, it's time to do some maths. It's time to do some calculation. I don't want to bore you with the details. My valuation is based on the discounted cash flow model. This is the model that is most widely used for valuing stocks. For those of you who don't know, basically free cash flow is the amount of cash generated by the company that is basically physically available for the company and can be used for buying back stocks, paying out dividends, paying off debt, making acquisitions, or reinvesting in the company. In terms of this model, what we are going to do is to project the free cash flow for our projection period. So I'm going to use a 5-year-long projection period. At the end of the projection period, we would define a terminal value for the company. And if we aggregate this terminal value and with the discounted value of the cash flows generated over the projection period, we would be able to calculate the fair intrinsic value of a share. The starting point of this calculation is the revenue. For the revenue, we have the latest number from 2021. You can see it on the screen. It's slightly above 1.5 billion. And I'm going to use the assumptions based on the management's expectations. So the management is expecting a revenue growth of 30% over a 5-year period. I'm going to use this number. So I calculated based on this 30% revenue growth number, the revenues till 2026. In order to define the free cash flows, we have to make assumptions about the free cash flow margin. So this indicates how many percent of the revenue would be represented by the free cash flows. From the latest earnings report, we've seen a free cash flow margin of 28%, but I need to highlight that the management is expecting some kind of margin decrease because of different factors. I don't want to get in more details, but a lot of the employees are, for instance, returning to the office. This is pressuring slightly the margins. And I also want to be conservative in this regards. So I'm going to use a margin of 25%. So we have the revenues, we have the margins, and we are able to calculate the free cash flows for the projection period. And by discounting back these cash flows, we get the present value of these cash flows over the projection period. Now we need to basically calculate the terminal value at the end of the projection period. For this regards, I'm going to use two methods and I'm going to average them out. So the first method is a perpetual growth method. Basically, this assumes that the company is going to grow eternally by an expected growth rate of the economy. So usually we are using like a lower rate here. I think that in terms of Palantir, we could eventually use a higher rate, but just being conservative, I assume the 3% growth rate, perpetual growth rate for the company. So this results a terminal value of 20 billion. And I'm also going to estimate the terminal value by a different method. This is a multiple method. So for this one, we are going to take the free cash flow at the end of the projection period, and we are going to apply a market multiple to it to get the terminal value. And for this reason, I'm going to use the average market multiple of price per free cash flow that is available today on the market. So the price per free cash flow multiple today for the sector that Palantir is active in is 20. So I'm going to use that ratio. I want to emphasize, guys, that I'm super conservative. So I do believe that in 5 years, Palantir's price to free cash flow multiple is going to be above the sector median, the sector average, because my expectation is that Palantir is going to grow faster than the average company in the sector. But as I said, I'm trying to be super conservative here, and that's why I'm calculating with the sector average. So we can see the terminal value is 28 billion US dollars, and in order to get the terminal value, I'm averaging out these two results. And as a terminal value, I got 24 billion US dollars. So this is going to be the terminal value. So we have the discounted values of the free cash flows for the projection period, and then the terminal value. As a discount factor, I used 8% discount rate. So this can be basically found on different websites on the internet, calculated specifically for Palantir. So by summarizing the discounted value of the free cash flow and adding to them the terminal value, we get the enterprise value. The enterprise value is 20 billion US dollars. The company has 2 billion, a little bit above 2 billion US dollars cash, and it has no debt. The cash has to be added to the enterprise value. So we got as such the equity value, which is a little bit above 22 billion US dollars. So this is the value that is basically for the shareholders. And now we are ready to calculate the intrinsic value of one single share. For this one, we need to get the number of shares outstanding. Currently, and this is also taken from the Q4 earnings report, the number of shares outstanding is slightly above 2 billion shares. So if we divide the equity value with the number of shares outstanding, we get the equity value per share. This is the fair intrinsic value of a Palantir share. This is how much you should pay for a Palantir share today. And guys, I'm not sure if you're surprised or not, but it's very close to the current stock price. The number that I got is 11.10 US dollars. So this is what I would pay for a Palantir share today. But as said, all this valuation was based on super conservative assumptions. So let's say, just want to perform an exercise. Let's say that we use another market multiple to calculate the terminal value, because as I said, I truly believe that Palantir at the end of the projection period would be valued by higher multiple than the sector median. I can't exclude that it's going to be valued at a double multiple as the sector median. So let's see what would happen if the price to free cash flow multiple would be double as what I used previously. In this case, Palantir's fair share price would be 16 US dollars. And let's see if additionally we also change the free cash flow margin to the current data, which is 28%, this would result a stock price, a fair intrinsic value for the stock of $18. So my conclusion from this valuation is that Palantir's current price is very close to the value calculated based on the most conservative assumptions, based on the worst case scenarios, based on the real bear case. So if anything comes back as more positive than this most conservative scenario or this bear case, then Palantir would reflect or would represent a considerable upside potential. So my assumption is, or my conclusion is, that Palantir, based on the most conservative assumption, is fairly valued at the moment, but taking into account that there's a huge likelihood that the company on the longer term, and on long term I mean multiple years, 3 years, 5 years, eventually 10 years even. On the 10 years period, for instance, it can exceed these conservative assumptions. I think that for those of you guys who are considering buying Palantir for the real long term, it would really make sense to open up positions at these discounted stock price levels, because basically the upside can be considerable. And also from a valuation perspective, so if we take a very quick look at Palantir's valuation metrics, as the company is not generating a profit yet, we can only take a look at the price to sales ratio. The price to sales ratio is eventually still a little bit high, so I would be more comfortable with lower values than this one. But from a historical perspective, Palantir started to be cheap, and companies growing with rates like Palantir, like 30, 35%, 40%, are valued with multiples even higher than this one. So Palantir has a price to sales multiple of 18 currently. From a historical perspective, this can be considered low. Also compared to some high growth peers, this is not super high. For instance, compared to Microsoft that has a price to sales of 13, it's high, but let's be honest, Palantir, even if it's not generating profit yet, is growing at almost double rates as Microsoft. So as you can see, we've seen price to sales ratios well above 30, 35. So currently the 18 price to sales can be considered historically cheap. Yes, the latest report was a disappointment, but that's one data point. And on the long term, it doesn't really change the narrative related to the stock. So all ties back to the execution, but taking into account the total addressable market, taking into account the potential use cases and of the company, and also the fact that based on the momentum gathering in the commercial sector, Palantir can be on the doorstep of a commercial breakthrough. I think that at the current price levels, it's really worth considering opening up a position in the stock and holding it, of course, on the long term. So guys, this was pretty much it that I wanted to tell you about Palantir. I hope you enjoyed this video. I hope it gave you support in formulating your trading strategy in Palantir for the next period. I hope it supported those ones who went through severe pain today, just like myself, but nothing has changed in my mind related to Palantir. I bought it for the long term, for 5 years, 10 years, we would see. And I'm really, really sure that Palantir is going to be a real Tesla one day, but we will have to wait patiently for that. So once again, please don't forget to subscribe, because I'm coming with new updates in an entertaining manner about the stock markets, but I would never lack real research and real analysis. So no clickbait, no bullshit, just real stock market research. Thank you very much for following my video, guys. Take care, see you very soon, and have a successful trading session tomorrow. Cheers, bye-bye.